Well, the Swiss prosecutors want to make sure that this deal is above board and that nothing in it is going to sully Switzerland's reputation as a global financial centre. Because don't forget, all of this happened very, very quickly. You know, Credit Suisse was hemorrhaging deposits, shareholders were dumping their stock, and creditors needed paying back. So the share price plunged, and the banking sector, the whole of it got wobbly. And then we had jitters across the whole of the financial sector. So the Swiss government and the regulators, they engineered this agreement to calm these worries about the global financial system. And UBS paid $3.25 billion, which was way below market value for Credit Suisse. I mean, just the Friday before it was worth $8 billion. But go a little bit further back, and it had been worth $80 billion. So it was some deal, but a deal that caused a stink with some of the taxpayers and also with shareholders because they didn't get to vote on this takeover. And also consider that Credit Suisse has been making the headlines for all the wrong reasons. Even before all of this financial stuff, they've been making bad bets on hedge funds. They've been fined for failing to prevent money laundering by a Bulgarian drugs ring, and also for not reporting offshore accounts held by American investors who wanted to avoid paying taxes. So the prosecutors are looking into potential breaches by government officials, by regulators, by banking executives. And they say this is really, they're proactively fulfilling its remit and their responsibility to contribute to a clean Swiss financial sector.
And what about these reports of thousands of job losses? OK, well, job cuts were already on the cards at Credit Suisse. They were looking to reduce the headcount by about 9,000. But what we're talking about now is potentially 36,000 jobs at risk. 11,000 of those in Switzerland alone. The cuts will mainly be in Credit Suisse's investment banking arm. I mean, that's where a lot of the scandals sort of emanated from, you know, way before all of this financial turmoil came to light. UBS's chairman, he has said, you know, previously that his plan was to downsize that part of the business for those reasons. But the combined new bank is looking to slash 20 to 30% of jobs. And I know I'm throwing numbers at you here, but these are two of the biggest banks in the world. So that's a lot of job losses. And combined, we're talking about a bank that will have 120,000 people around the world. But really, there's a lot of jobs. And I expect we're going to be hearing a lot more about this throughout the week, because on Tuesday, it's Credit Suisse's annual shareholders meeting taking place in Zurich. Investors are going to have a lot of searching questions there. And then UBS has its annual meeting the following day in Basel. Juliet, thank you very much. Our correspondent, Juliet Mann.